Hey hustlers, welcome back to my channel. Welcome to episode 4 of the business plan guide, and today we are talking about financial projections, the moolah, the money, of course. And if you want to find out about financial projections, where to start, if you are starting out your business, then of course keep on watching. So what are financial projections and why are they important? Projecting financially and planning financially for your business helps you to see how much cash or how much money will you actually need to get this business started and off the ground. And it's very important to also project things like sales and so on and so forth, and I'll say this and I'll explain this later in the video, so you have an overview of the total business financial aspect of it. Because at the end of the day, you want to make money from running and starting this business, and projecting and planning for it financially will help you do so. As they always say, if you fail to plan, you plan to fail. And the first starting point in planning financially for your business is setup costs. Start there. What are the setup costs entailed in order for you to start this business? How much money will you need to have this business set up? How much money will you need for products? How much money will you need for signage, equipment, fittings in the store, if you'll have an actual store location and a store where people can come and buy products from you, or if you've decided to have an online business, maybe you want to have a website set up, all of that stuff. How much will that cost you? I want to make this as simple as possible for anyone who doesn't have a financial background, a financial understanding, or someone who just doesn't do well with numbers and they feel overwhelmed when numbers are entailed. I want this to be as simple for you to understand as well, and just write down things that you know you will need. So if we use, for example, the makeup business, as this is an example we've used from the beginning, calculate how much products you need to buy. Maybe you want to test 50 eyeshadow palettes. 50 eyeshadow palettes, how much will they cost you? Maybe you want to have an actual physical location. Where have you found a place? How much will the rent cost you for the first month rent? Let's just do a 1 month projection and then maybe project it based on that assumption for the rest of the year. Just start there and see, okay, I need this, I need that, I need that. How much will each of those line items cost you to set up this business? At the end of the day, then you'll have a round up figure and a round up number for this setup cost, because that's where you need to start. Essentially, you can't just start out of nowhere. There needs to be costs entailed for you to start your business. Then the next part of the financial projections that I would say are very important would be doing a sales forecast, forecasting your sales. How many units are you going to sell in a month? Now this is based on an assumption, because you don't know, so kind of assume and maybe do some market research of people within your industry and see how much are they servicing a month. It's going to be quite hard, especially if they don't have any financials available for you to look into. But if there are any financials available for the type of business you are wanting to start, that's great, because then you can have some actual physical information to look at. If you don't have that information available, use assumptions. Kind of see in your mind and try and calculate and see, okay, maybe I've done market research and I've asked 20 people, and of the 20 people I've asked, only 10 will say they'll be interested in buying my product. Then that's the base to start. 10 customers can buy your product, so you are going to be selling to 10 customers a month. How much will this cost? And this will calculate and help you calculate your cost of sales. That will essentially give you your gross profits. I'll explain a bit later, in a second, I mean. And so you want to calculate, okay, how many units are you going to sell? How many customers can you expect in a month of starting your business? How much cost will these products be? And then once you take your sales, minusing your cost of sales. Cost of sales is the cost of the products or the goods. So how much did you pay to buy the goods? And then sales is how much did someone pay to buy the goods from you. Hope that makes sense. Will give you your gross profit. You want to see at the end of that specific month, what will your gross profit be? And then, which brings me to the next step, is an expenses budget projection. You want to project what your expenses will be, and expenses are broken into two. There's variable expenses and there's fixed expenses. Fixed expenses include things that are fixed, and there's a set amount that you know for a certain period that's what you'll be paying, and that's rent. If you're going to be renting a place or an area, you know, maybe you've signed a lease for a year and you know that's the amount of rent you're paying. It won't change after a year, so that's your fixed amount. Maybe payroll, if you'll have some staff that you'll hire, you kind of know how much you'll be paying them, and that's a fixed amount. Variable would be like telephone, marketing, data is also involved in telephone, things that you can't set a certain amount on. They can change on a month-to-month basis, but just have a variable projection just for a month to kind of see. So in here you can include marketing. How much will you be paying someone to market your business? Maybe you'll be involving influencers, things like that. So you want to put it in there, and you want to take your gross profit, so that amount that we calculated at the beginning, minusing your expenses, they will give you your net income or your profit at the end of the month. So roughly, what will your business profit make? Will it be making a profit, or will it be making a loss? And a loss is when your expenses are exceeding your gross profit. So if your expenses are way over how much money you're actually making in sales or your gross profit, then your business is in trouble, and this can help you already see you are heading into trouble. So where do you need to change? Maybe you need to increase your sales projection, so maybe you need to sell to 20 customers instead of 10, or maybe you need to pull back on some of your expenses, and you know, maybe you can have an effect over your variable expenses, because those are more flexible, so you don't actually need that much data in a month, so you only need to spend 100 rand instead of 500 rand, or whatever it is. Wherever you can affect change, that's where you need to obviously look at after having a projection and seeing, okay, am I in trouble or am I still fine? And then the next step, I would say, is having a cash flow projection. I know this can sound very daunting to someone who has no accounting background, but a cash flow is very good in determining and seeing the cash health of your business. How healthy is your business where cash is concerned? And the cash flow is broken up into three different parts. It has an operating activities part, it has an investing part, and a financing part. The operating part is the day-to-day activities of your business. So this involves cash coming in and cash going out of your business. This involves accounts receivables. If you will be having a credit option available for people to have credit from you in your business, or credit terms, this is accounts receivable. How much cash will you be receiving from people who owe you money? This also involves cash that you will be paying out, so accounts payable. How much money will you be paying to people you owe money? This also involves depreciation. If you have assets in your business, you need to account for depreciation as well, because you want to be tax compliant and you want to submit your tax returns yearly when your business is started, and you don't want to get into trouble with SARS. So please do it right. And if you need help with all of this, and this is sounding very like daunting for you, I'd really highly suggest that you speak to a professional, someone who can guide you and help you, because you don't want to find yourself owing SARS and being in a position where you are in debt because you didn't do things the right way and didn't start your business the right way. If you want me to elaborate more on this in terms of starting your business the right way, being tax compliant and all of that, please do leave a comment down below, and I'll do a video more about this topic. And then we move on to investing activities in the cash flow statement, and this mainly involves the cash outflow and inflow of acquiring and purchasing assets. So if you're purchasing an asset, that's a cash outflow because you're spending money out. If you're selling an asset, that's money coming in. So this basically just measures your movement in investing activities, mainly around the acquiring or the selling of assets. Then the next one is the financing activities, and this is where you're measuring obligations to someone else. So have you taken a loan? You know, are you going to be paying back a loan? Or also this measures the activities around the shareholders, so any cash given to shareholders. Maybe in this part, because you're starting out, there will be no cash given to shareholders because you're the main person who owns that business, so there won't be any movement around that factor. So that's just kind of give you at the end of the day an overall roundup value of this is how much cash has been going in the business, and this is how much cash has been going out, and to see the cash healthiness of your business, if that makes sense. And then another statement that's very important to consider is the balance sheet. I know this can sound very scary to someone, but a balance sheet is basically looking at your assets, your liabilities, and your owner's equity. And assets equals a very basic accounting formula. Assets assets equals liabilities plus your owner's equity. Assets involve things like inventory, cash, and property, or there are more other assets, but this is mainly what the common assets would be if you're starting a business. So inventory is what stock do you have available to convert into cash. So that's your inventory. So that'll be your eyeshadow palettes, that will make part of your inventory. Cash, how much money is in your business bank account. And assets, property, you know, if your business does have property. If you're still renting and doesn't have property, you shouldn't worry about that. And then liabilities goes to your obligation to other people, as I've mentioned. So how much money will you be paying creditors, people who owe you money. Forgot to mention people who creditors, people you owe money, and debtors are people you owe money. And debtors also form part of your assets as well. And you just want to know and see, okay, have you taken a loan to start this business? Are you paying back a loan to the bank, or are you paying back a loan to someone that you've loaned? And then your owner's equity is once you've paid all your liabilities, this is what is left over, and this is normally referred to as retained earnings in the accounting world. If this sounds like gibberish to you and it sounds quite overwhelming, don't you worry. Leave a comment down below, ask me a question to explain some terms that I've mentioned here that don't make sense for you, and I'll definitely do that for you. Those are mainly the very, very important statements to consider. If there's anything for you to take out of this video and you are feeling overwhelmed, please take out setup costs. You want to know how much money it will take to set it up. You want to take away sales and expenses, budgeting and forecasting. You want to know how much sales you need to make and how much your expenses will be. And then the very, very important thing, you want to determine what your break-even point will be. Break-even point means how many it means a point where your sales and your expenses are meeting in the middle, meaning the sales you're making is covering your expenses, you're not making a loss and you're not making a profit, you're running your business at a break-even point. And this is a good point to calculate and determine for yourself, because you want to know how many customers and how many sales you need to make to cover your expenses. Let's say, for example, your expenses come to 5,000 Rand at the end of the month or monthly, and you have products worth 100 Rand. 5,000 Rand divided by 100 Rand means you need to sell to 50 customers to make 5,000 Rand worth of sales to cover your expenses. This is very important to determine, because you need to know this is how much customers I need to sell to, and this is how much money I need to make sure my business stays afloat, that I'm not making a loss, and I'm not I'm not back paying, or I'm now in arrears in terms of my payments for my expenses and all of that, because that's not a good position to be in when you are starting out a business. At the end of the day, research is very important. If you don't have any interest in information, or you don't know where to start, do your research about other existing businesses as well. Maybe contact a professional, mainly in this case, because we're talking about finances, an accountant who has experience in this industry, to give you some insight and some information. And also, at the end of the day, you don't want to be unrealistic when you're projecting your sales and your numbers. You want to be realistic, at the same time also be optimistic, because you want to make a profit and you want your business to make money at the end of the day. So basically, that's the financial projections. You want to know what your setup costs are, you want to know what your sales forecast will be, to what gross profit you'll be making, you want to know what your expenses are, and you want to know your cash healthiness of your business in a cash flow statement. You want to know your balance sheet as well, your assets, your liabilities, and of course your owner's equity. And you want to know what the break-even point is. If there's any questions about any of the things I've mentioned in this video, please do leave a comment down below. I didn't want this video to be too long. If you guys want a follow-up video, maybe explaining more about these terms that I've mentioned, please do leave that down below as well. And yeah, I hope I covered everything for you guys in this video. As always, keep hustling, and I'm really excited to have you guys. I'm really grateful to have had you guys on this journey with me. Please click that subscribe button down below, subscribe to my channel for more content, and as always, keep hustling. I'll see you guys on my next video. Bye.